a relative for a layman would be a blood relative?
Any monies that are given to relatives,
What is the taxation on something like that?
every sale or every change of title has to be recorded with the municipal corporation.
I have another interesting question. I mean, a question that comes to my mind, right?
Yeah.
That is regarding gifts.
Yeah.
Now, say if I receive some shares or some cash for that matter, and that is a high value cash item I'm talking about.
Yeah.
What is the taxation on something like that?
So any taxation. So let's bifurcate that as well. So there is a definition of a relative which is given under Income Tax Act. Any monies that are given to relatives are non-taxable. So any amount of money. So tomorrow, if my mom, I'm hoping she watches the podcast and she has a change of heart and she says that I want to give 10 lakh to you tomorrow, that in my hands will be absolutely non-taxable income tax wise. Vice versa, if I get any gifts from non-relatives, now there are a set of individuals under the definition. Anybody who does not fall under the purview of that definition um, are regarded as non-relatives, and I have a cap of 50,000. So any cash that I receive above 50,000 will be taxed at my individual tax slab. So tomorrow, if you feel that you should give me 50,000 or maybe 75,000,
The 25,000
the 25,000 will get taxed at my individual tax slab.
Understood. So, and you mentioned relative. So, is this blood relative? I mean, for just the layman to understand when you say relative, because I believe you come from the legal language.
Yes.
Right. So, a relative for a layman would be a blood relative.
It is a blood relative. Having said that, the definition of relative which is given under Income Tax Act is very exhaustive. So it also includes not just blood relatives, ancestors, descendants, not just that, but any daughter-in-law, all of those as well, which are not blood relatives. So one would have to really deep dive into that definition in order to see that if you're gifting something to somebody, whether they fall under that relative category. Otherwise, for non-relatives, like I said, there is a section 56(2)(10) in Income Tax Act which gets triggered, where the cap then goes to 50,000 per year.
Say, if there are accounts that are jointly owned by, say, my mother and me and my sister, in fact, we are three people, and we jointly, hold some accounts together.
Yeah.
And probably all the three of us are in different tax slabs. How does taxation apply in that case?
I think that's a great question. So what happens is, when the transfer happens, right, the transfer does not per se trigger any taxation. It is only when you close the bank accounts and you would utilize the monies in some way, will the income tax get triggered. So those will be then as per your individual tax slab. So say you fall under the 30% category and your sister falls under the 20% category, her share in the account will then be taxed at 20% and yours at 30% respectively. So while joint holdings are actually a great way of conveniently holding assets amongst family members, but one needs to be really careful when it comes to the taxation part of it, because not a lot of people know about this, that it will get taxed as per my income tax slab.
But only the share is
only the share.
Correct.
Yes, only the
so
share.
If there are three people, it is, I mean, of course, unless until you've mentioned the division of share.
Yeah.
But it's otherwise a one-third,
It's
one-third.
equal. Yes,
Equal.
it's an equal share.
Shraddha, another question that comes to my mind now. Say there is a property that has been passed on to my parents in a form of inheritance from my grandparents, and now it's come to me.
Yeah.
At this point in time, I want to probably sell it, right? I do not have access to the property purchase papers or whatever agreements that probably were done 70 years back. How does tax apply to me in that case?
See, the taxation, inheritance tax, I think we've already covered.
Correct.
No inheritance tax. But tomorrow if you go to sell it, one of the major challenges or the roadblocks that you would face is, um, if you don't procure the original document, what would happen is the benefit of indexation that is received when calculating, LTCG, long-term capital gains, will not be applicable to you. So the entire sale amount will then be taxed at 12.5%. So
What are you saying? So
yes,
if I don't know at what price it was bought at, or you say even if I know but I don't have any documents to prove it,
yeah.
I have to pay tax on the entire amount.
Yes. So we had a client, we had a similar situation with a client where she inherited a property from her dad, right? And when she went to sell it, and in migrating or something, she lost the original documents. One of the challenges that she faced was, the long term capital gains that was triggered was on the entire amount, and she did not get any benefit on the indexed value. So I feel that this is a great point to
Point.
tell the viewers that no matter how old documents you have, they need to be preserved and kept intact so that you get such benefits, because the client also did not know about it. It was a shocker for her when she got a notice from the income tax department.
But is there a way out to this entire thing? Or, I mean, I don't mean in a way that, we are evading any tax laws,
Yeah.
but something that we can keep in mind to ensure that we're safeguarding ourselves.
In most cases, all of these documents are preserved with municipal corporations. And by giving a simple application, you can procure these documents. There's a nominal fee to that. Having said that, in a lot of cases, because the records are really old, they are not able to retrieve those documents. In such cases, they do give you a letter which should suffice, that we could not locate the document, or even if they by some way. So there is something called as mutation in the municipal corporation, which means that every sale or every change of title has to be recorded with the municipal corporation. There are two ways of transferring an immovable property. One is your ownership transfer, which happens at the society level, where your share certificate gets changed. The second is you need to go to the municipal corporation and get the title deeds changed. This is the most important point, because if you don't have the title documents updated, there is no way that you can get the indexation benefits. Even if you've retrieved the document, and if they are not up to date, there is no way that you could get an indexation benefit.
Right, understood. And what happens in cases of liabilities? Like, all of this is assets, all of this is like good things coming into our kitty, and some being taken away by the government.
Yeah.
But what happens when it comes to liabilities?
I think that's a great question, Drashti, because not a lot of people actually think about liabilities when it comes to inheritance. People think that, okay, I'm going to get assets.
Assets, yeah.
Yeah. But there are two types of liabilities in order to understand. One being secured liabilities, which is, for example, your home loan, right? With the change in rules, now home loans are covered with term insurances, where banks compulsorily ask you to take term insurances. So in case of a person passing away who has a home loan, if the term insurance, in most cases, the term insurance covers the liability or the rest of the amount. The problem, and so second case would be where, way back, like maybe in the 90s or in the 80s, people must have purchased properties. They wouldn't, of course, have
Term
term
insurance.
insurances at that time. So in such cases, what happens is their estate is then liquidated, and the balance amount is first paid off, and then the rest of the amount goes to the legal heirs. Unsecured liabilities could encompass your personal loans, right? So suppose my dad had a personal loan and he passed away having a personal loan. I would be liable only to that extent. My personal assets as a legal heir cannot be attached in the personal loan liability. So whatever I am going to inherit from him, first that amount will be paid off, and then the amount would come to me, unless I am a co-borrower of that loan. My
Right.
dad and I both, if we both have availed that personal loan, only then, if I am unable to pay or my dad was unable to pay, would I be liable to pay from my personal
The
assets
entire
the
piece.
entire amount, right? Otherwise I am liable only to pay that much amount
Understood.
from the estate of that person, not from my personal
Correct.
assets.
So that's why you said that some will be deducted. I mean, you
Yes,
first pay the loan and then the
yes,
rest comes to you.
that's correct.
Understood. Great. Has there been any, client that you've come across where probably you've helped them with a scenario like this?
Yes. So there was a client who passed away having a 20 lakh liability, almost a 20 lakh liability. So when we valued his assets, he had his son and his spouse. So when we valued his estate, it was coming up to 15 lakhs, which means the entire estate or the entire inheritance was first to be paid off for the loan that he had. Now,
Right.
because this was a personal loan, the family had to pay off the 15 lakh first. The rest of the 5 lakhs was then written off. It was not taken into consideration. So the family did not have to pay uh, out of their pockets, whatever
Right.
the balance amount was remaining for the liability.
Right. So, I'm just trying to understand. You said that all his assets came up to around 15 lakhs.
Yeah.
This is not including the assets of the family, like other members of the house, right?
No, it is
His.
only the individual's asset.
Understood. Understood.
Yeah.
Okay, that gives me some clarity because
Yeah.
I got a little stressed out, when I heard this.
No, no.
Okay, understood.
Yeah.
Okay, that's a great example for us to emphasize on the need of inheritance and the aspect of liability under inheritance, right?
Yeah.
Because we don't talk much about it.
Yes.
Towards now that we're in the end of the conversation, if there is anything that you would want to share with our viewers for them to keep in mind, I think that will really help.
Sure. I think one of the key aspects is having the documentation in place. Because no matter what asset class you inherit, if you do not have updated records, it will go for a toss. The income tax department has become extremely stringent when it comes to taxing, different asset classes. So it is extremely important. And second, I would also like to emphasize that when you do have inheritance, um, do contact an advisor, whether it is a chartered accountant or a legal expert, because they will help you navigate, because there are so many asset classes that are prevalent right now, that it becomes very difficult for a layman to even gather their thoughts as to what, of course, first it is a time of grief. Second, when you are trying to navigate through through such huge pool of assets, it becomes very overwhelming. And in such a situation, there are chances that you may miss out on certain important or key aspects of taxation. Anything relating to estate planning can also be missed. So I would definitely say that whenever you envisage, and even if you don't envisage it right now, if you envisage receiving any inheritance in the near future, or if you are thinking of if you're thinking of passing on the assets to your children, I think it is a great conversation starter. Make your children aware about these things. They should be protected to some extent, but not to an extent where the families do not know about the liabilities or any tax implications that they're going to face in future when you are not around. So I think that would be one of the key takeaways.
Right. I think you covered all of it. Thank you so much for joining us.